Good afternoon, this is Mike Bartels, the Bear Market Investor. The market update for January 25th, 2012. We're here looking at the CBOE Market Volatility Index, otherwise known as the VIX in the weekly time frame. Then we're going to be looking at the daily time frame, followed by a final look at the S&P 500 stock index. Now, first I want to show you a chart that I've shown you quite a number of times in the past. And I want to give you a big picture analysis here on the Volatility Index before we move into the daily time frame. Now, a long time ago, I had shown you this chart, and this chart basically showed that I had analyzed the Volatility Index going all the way back into 2008 and come up with a fractal that divided both in price and time, and such that we can see it right here. Basically, in this time period, dividing up into two periods right here, we had a period where we had formed essentially a wedge, followed by kind of a sideways and down movement. That was exactly what happened here. This subdivided into exactly half of this time period, followed by the exact same movement right here. Then this one subdivided into a quarter of this right here. So from there, we were anticipating that we would see a break to the upside, and that would put in the final peak in the stock market indices. And that's in fact what happened. Now, this also happened to be used for the Fibonacci fan, and I had some older videos that discuss that. I'm not going to go into that right now because these time periods, the Fibonacci fan here and this entire pattern have absolutely no relevance anymore to what the market is currently doing, but I wanted to show you it anyways, as well as the areas of support that we have in the Volatility Index and where I think we are looking to land here. Now, we have this long-term area of ascending support here, followed by the horizontal area of support, and this shorter-term ascending area of support right here as well. Now, let's go and have a look at our wedge formation that we formed. And this was something that I drew up quite a while ago here. I just had my eye on thinking that we're at least going to come back to challenge this ascending area of support in white here. So let's go and have a look at the daily time frame, and let's see where we might be going with this. Now, this is again something that I drew up actually back in and around this time frame right here, theorizing that we might actually be coming down in kind of a wedge formation if the market continued to hold up, and it certainly did do that. We have what is pretty clear to me to be a very mature wedge, following wedge formation here that looks about ready to break out to the upside. Again, you can go ahead and ignore these time sequences. This means nothing at this point in time, and I will be removing it from my chart here. But again, wanted to show you the big picture work that we've done in the past in the Volatility Index. Now, what we've done is actually penetrated below this ascending area of support to touch the very lower boundary of this wedge pattern that we see here. And as you can see, we did touch that exactly on the hair and put in kind of a reversal candlestick right here. Now, we clearly found support at this ascending area of support right here that we can see is basically formed by connecting these two lows right here, and you can see that's exactly where we found support. I have reason to believe that we're probably just about finished with this rise, and the Volatility Index is showing us that as well. Now let's have a look at the S&P 500 stock index right now, but actually first let me go ahead and comment a little bit more on this. If you're not familiar with the Volatility Index, it's a way of measuring just how fearful or complacent the market is. At this point in time, the market has historically low levels on the Volatility Index. Historically low levels of volatility mean historically high levels of complacency. And that is a perfect storm for a market decline to occur, because when volatility breaks out on this particular chart, we should see the market begin to decline, and probably quite rapidly. We have a very mature pattern here within the Volatility Index that we can expect to break out at any time here. Now, there is no reason that this can't form into some other pattern, or that we can't have some sort of subdividing pattern similar to what we had from the March 2009 lows until the peak in the stock market indices. But I can tell you that it's probably more likely, based on our wave structure, to expect that the markets are going to collapse, and probably very, very soon. Okay, we're looking at the S&P 500 stock index in the daily time frame. What I want to do is familiarize you with the wave structure interpretation that I'm working under at the moment, as well as why I believe that the market advance from October of last year is just about ready to terminate. Now, I do want to say this right off the bat. There are bullish Elliottians, big picture, and bearish Elliottians. Now, as long as nobody's breaking or violating any rules with regard to Elliott wave, and there are very, very specific rules, then you can have a legitimate disagreement on that. Now, due to macroeconomic circumstances, as well as a whole host of other things, I happen to believe that we're in a larger bear market, okay? So, my wave structure interpretation then may slightly differ from other bears in that I am actually placing the ABC correction from the March 2009 lows, a counter trend rally, to terminate at this point right here. From a numeric standpoint, it actually is right here. But I believe from a structural standpoint, it actually terminates here. I've mentioned why that is in prior videos, and I'm not going to get into a whole lot of detail on that because it's really somewhat of an academic debate at best. But I am placing that right here. Now, that would have us as having a wave 1 down, wave 2 up, wave 3 down, wave 4 up in the form of a double zigzag complex correction, and then a wave 5 down in the form of an ending diagonal. From there, I said to expect a very, very sharp and scary rally for bears, and do not be short that. And that's exactly what happened right here. Now, the problem is this traversed a vast amount of price in a very short period of time. Now, it is possible that you could have a correction this sharp and this short of period of time correct the entire decline from here to here or here to here. But I thought it was somewhat improbable, but possible. So I was expecting the possibility that we might have either had 5 up here in the form of an A wave, or that we had an ABC correction here, and that I should be expecting a 3 wave correction, either in the form of a B wave or an X wave. And I believe that we actually have an X wave here. So I'm counting this really as an A, B, C, X, A, B, C. And we're just about ready to terminate, I believe, the C wave here. Now, this area of support and resistance, going all the way back to the 2000 peak in the stock market, and I've talked about it in prior videos, could be where we're going right here. We could be just wanting to touch that before coming back down. Now, I do have to say this. I did specify a 1330 stop for my entry into my short position at 1295 and change. I am raising that. I think 1340 might be enough, but I'm not 100% sure of that. So I want to caution you that that may yet be too tight of a stop, or perhaps you just want to stop yourself out right now and wait for that eventual top to come in. I'm just going to go ahead and wait this thing out just a little bit longer. Started at 1340, raised my stop to 1340, and perhaps put it on manual to stop myself out if necessary, perhaps going beyond 1340. So we're kind of in that area where I know I should be expecting a top, and I thought 1330 was enough based on the wave structure here, but I had to admit this leg up right here was extremely difficult to count, and I have to say there were many different interpretations that an Elliottician could have that were legitimate interpretations that had to be very constantly revised based on new data. And any market technician, as they're presented with new data, has to continually revise their interpretation of the market technicals, the internals of the market, if you will. So an Elliottian is no different in that they have to continually look at their wave structure and ensure that that still continues to make sense. Now, I do have to say too that we are in the very final stages of an advance from a number of different perspectives here, one of which is Elliott wave, but we do have some fairly deteriorating market technicals in a number of areas. We have a pretty clear divergence here on the MACD histogram. We have a divergence here potentially forming on the MACD itself. Nothing to get too alarmed at here with regard to the RSI. Certainly we're seeing a little bit of strength here. You sometimes see that going into a C wave before it finally drops. Okay, we're also seeing that the ADX is getting a little over over the top here with regard to where the positive DI is, and that we have a higher reading now on the ADX than the positive DI, suggesting that this rally is pretty long in the tooth and ready to decline here. So a number of different factors here that I'm looking at, one of which is a potential push into this area right here and the termination of that double zigzag. So let's go ahead and have a look at our intraday time frame and get a little better perspective on this. Okay, now we're looking at the 50-minute time frame real briefly here. What I want to do is show you going all the way back to the 12th or 13th, I believe, is where I probably entered into my short position at around 12.95 and change, expecting that we probably had at least an early indication that a top may have been in place. Now, I said that one of my counts had us topping back at that point, but others had us actually moving higher. I wasn't exactly sure whether the market would, but I'd rather be early than late, and that's why I entered in and around that time frame. Now, we did end up moving higher. It looked like whatever this was probably a fourth wave of some sort, and that within this wave structure right here, we have some form of 5 up that's just about ready to complete. Now, I think we probably had the termination point of a third wave of a third right here, followed by a fifth wave. So it may have actually been, first up, second down, first of third, second of third, third of third, fourth of third, and then maybe a fifth of third at that point, followed by another fourth wave right here, and then we might have had a first of fifth, second of fifth, third of fifth, and then we could get a fourth of fifth, and then a fifth of fifth. You can see that 1340 up there. Okay, 1330 is certainly not far above where we are now. I can also say that there is a legitimate count that has the fourth wave actually terminated at this point right here, suggesting that we could have actually had a first wave up, second wave down, third wave up, fourth wave down, and then fifth wave up, terminating that fifth wave right there. But I mean, we are really close in a number of respects to that blue line right there. That you can see is that declining area of resistance going all the way back to the 2000 peak in the S&P 500 stock index. So I do think that we're at least going to encounter resistance there. That's not far above where we currently are there. I'm seeing resistance in at that 1331 area from a Fibonacci standpoint. There's a number of things above. We could actually again push this beyond that 1340 area, and I may end up doing that. I'm really trying to catch a big swing here, and having a loose stop is sometimes very necessary for that. Some people even wait until the last possible minute or until the trend has changed. I would just rather get in a little bit early here. and that's what I was trying to do back there. So again, from a standpoint of wave structure, we have a very real possibility that we've either put in a top, today in and around this level, or could do so with one small little push to the upside, or we'll have a pullback into around this 1319 area, then a push maybe slightly above into that 1331 area. Now again, if we want to go above that, where I'm really looking at is the possibility that we push into this, cyan trend line right here, declining area of resistance before terminating and then moving lower. A number of different possibilities here. So I don't know exactly what the correct interpretation is here, but based on overall wave structure, I think that we're really pretty close to a solid termination point for this market advance from October. So let's go ahead and have a look at the 5-minute chart briefly before I go ahead and finish the video. Okay, we're looking at the S&P 500 stock index in the 5-minute time frame. What I want to do is show you what I believe is a fourth wave structure here and how that might count. Now, in the prior video, I think I had mentioned a couple of possible fourth waves that we were going through there, or could be interpreted as fourth waves, and I think those probably were fourth waves. I just wasn't sure what the bigger count was within the C wave, because it really was a sloppy wave structure within the C wave. It's becoming a little bit more clear, and certainly with regard to how long this rally has lasted, long in the tooth. So in any case, I'm looking at a possible primary count of having a simple ABC correction terminating at this point right here. From there, we had a first wave up, second wave down in the form of an expanded flat, third wave up, or just about with one small little tiny push to the upside. Then we'll see a pullback into that 1320 area before pushing up into the 1331 to 1336 area. Okay, that's what I'm expecting, but I am willing to put my stop on manual because I'm moving it up again to 1340. If wave structure dictates I should put it on manual and be a little bit more flexible, I'm going to be, okay? If you're not willing to be flexible at this point, I would stop yourself out, wait for a better entry point, or wait for some confirmation of a top to be in place. Again, I'm just working at it from the standpoint of I wanted to be a little bit early to the game here rather than late to it. So either is perfectly fine. Waiting certainly is generally less risk, but again, when you start declining, I don't know. I mean, even if it turned out to be 45 points to the upside before we stopped from that 1295 area that I entered, we could cover that ground in 2 day, a simple 2-day decline in the S&P 500 stock index. So I'm not really too worried about this. Once the market starts declining under this wave structure interpretation, probably will be pretty sharp and fast. So again, primary count again has us terminating that fourth wave here. We'll probably see a small little fourth or fifth pullback followed by a push to the upside there. Now, the other option is that we terminate it right here, and that would suggest that we had a wave 1 up, 2 down, 3 up, 4 down, and then we're currently working on the fifth wave up at this point in time. I think that's the wrong interpretation, but it is possible. Suggests that we have either already topped or we are just about to. The other interpretation is that we had a triangle that terminated right here. Wave 1 up, wave 2 down, wave 3 up, wave 4 down, and we are currently working on or have already terminated wave 5 up. Alright guys, I'm losing my voice here, so I gotta wrap things up, but please do rate the video. I would appreciate it. Have a great night.